Welcome back to AWANI. Bitcoin's roller coaster in Q4 has stunned even seasoned investors. After smashing through 126,200 US dollars in October, the world's largest cryptocurrency plunged to below 90,000 US dollars within weeks, erasing billions in market value. And this 25% swing comes amid a backdrop of AWANI liquidity, macro uncertainty, and shifting investor sentiment, raising urgent questions. Is this a healthy correction in a maturing market or a red flag signaling deeper volatility ahead? So to help us break this all down, we're joined by someone who watches data very closely, the General Manager APAC at Luno Malaysia, Aaron Tang. Aaron Tang, good morning. We see that Bitcoin hit a record high 126,200 US dollars in October, and then it fell sharply, dipping below 90,000. So this was a major move in a short period. So from your read on the data, what actually triggered this sharp reversal? Was this purely a market that overheated too fast, or were there deeper structural issues that led to the sudden slide?
For having me. So I think the couple of factors that may have contributed to this drop. So number one, there was a liquidity freeze from the recent US government shutdown. Number two, perhaps there are also some rate cut expectations that may not be as confident as they were before because due to inflation. So previously people were expecting a rate cut, but I think people are not so confident anymore. In addition to that, there are, I think, signals of a weakening labor market as well. So heightened overall economic uncertainty. There's also a couple of crypto-specific pressures. So I think the previous few ones, I mentioned a bit more macro factors, but I think there are a couple of crypto-specific pressures amplifying the reversal, such as significant outflows from Bitcoin ETFs. So Bitcoin ETFs, passive investments tracking the market due to the economic uncertainty, a lot of sell-off. So they are also witnessing significant outflows. And I think besides that, perhaps more importantly, large-scale leverage-driven liquidations by sophisticated traders and investors in the space. So basically seeing that the market was, I think there was levels of leverage that were perhaps not that sustainable. So I think in summary, there's both the macroeconomic factors, there's also some crypto-specific pressures. And yeah, I think some analysts view this as a temporary correction. Some people are still quite confident in the overall cycle, but I guess we'll get more into that.
So you just laid out all the triggering factors when it comes to this sharp reversal. But when we zoom into the mechanics of the drop, how much of the drop is large-scale liquidation versus actual macro pressure? And are we talking about a correction caused mainly by leverage washing out the system, or did global headlines like US-China tariff sanctions and US political uncertainty meaningfully add to the downside, Aaron?
Yeah, so in terms of liquidation versus actual macro, let's just frame it. So in October 2025, we peaked around 126,000. The price has dropped about 30%. So it bottomed out, I think, yesterday about $90,000. I think it was more amplified by the large-scale liquidations. So perhaps it was triggered by the macroeconomic pressures, first and foremost, but then it was amplified by the large-scale liquidation. So I think specifically on October 10th, we saw a lot of several platforms, especially offshore platforms, that came under a lot of pressure, and a lot of traders, sophisticated traders, were liquidated in that event. I think that being said, there are longer term, better macro news still on the horizon. So for example, there's expectations of more or quantitative easing starting to happen again. That's number one. There remain persistent concerns around currency devaluation, I think, in multiple countries around the world, multiple economies around the world. And of course, who can forget about rising debt and fiscal deficits? So there is expectations that flows will continue to move into alternative assets such as digital assets, gold, silver, and so on. So I think it's quite an interesting one that yeah, we've had this sharp little drop here, but if you look into previous cycles, like 4-year cycles where Bitcoin moved tremendously, it is actually not very uncommon to see drops of 30% or more.
And this brings us to the bigger question about market structure, because on one hand, we're seeing more institutional investors, more regulated products, even spot ETFs providing a stronger foundation. But on the other hand, episodes like this make it look as if speculative leverage still dominates short-term price discovery. So based on this recent volatility, are we looking at a maturing crypto market, or does this show that crypto remains highly speculative at its core?
Definitely, the market is maturing. Yeah, because if you look back again, not this cycle, but look back 4 years, 8 years ago, you'll see that the drops were actually much more pronounced. So we've seen this 30% drop, for example, but 4 years ago, you might see a 40, 50% drop, even as the overall market was still booming in an overall bull trend. Looking back, we can see that. But in that moment, it felt much worse, for example, that the coin was dropping 40%, 50%. So I think, yeah, the market is maturing, but of course, it is not as mature as some of our more established assets. For example, if you compare this to, say, an established stock market, for example, we're not going to have that level of stability yet, given that digital assets such a nascent asset class. And I think one angle to view the liquidation in perspective is perhaps it can be seen as a healthy reset. If too much leverage is in the system, too many people are basically buying or trading on debt and speculation, then perhaps it is a healthier reset to flush some of this excess not liquidity, excess leverage out of the system, and hopefully we hope for the bull run to continue.
Aaron, what are you observing among Malaysian investors and traders? Is the mood one of a fear and pulling back, or are people trading this as another buying the deep opportunity? Because interestingly, in this cycle, Malaysians appear a lot calmer than previous years. So what are you seeing on the ground?
Yeah, I think Malaysians actually, we as a group, we continue to learn, we continue to grow, and I'm glad you pointed out that it does feel calmer than previous cycles, and I just want to answer this question in two angles. So when you look at the traders, I think the traders traders move with short-term market volatility, so they've also reacted to the liquidations. They've also done their trades according to the market, and that's why you see our what do you call that? You see our Malaysian prices in line with the rest of the crypto markets. However, if you look at the investors, the long-term investors, I think there's a bit more of a wait and see approach. So we're still seeing a huge amount of Malaysians continuing to hold their crypto assets. Not everyone selling in a panic, etc. So yeah, I think that's also a bit of a wait and see approach, and I think we have lots and lots of long-term believers in the digital asset space.
But on the other hand, many investors assumed that with the US ending quantitative tightening, we'd see some support for risk assets, including crypto. Yet the opposite happened, and the market sold off instead. So why didn't the end of QT translate into improved liquidity for crypto? Is this simply a timing issue, or does it signal that crypto is still trading like a short-term macro-sensitive risk asset rather than a long-term hedge?
I think it's perhaps more of the former at the moment. So well, we mentioned earlier that there are long-term believers, there are long-term investors, and so on. But in the short term, price is often driven by traders, hedge funds, people who are moving into the markets in and out quickly. And I think historically we've also seen that quantitative tightening. It doesn't mean that it doesn't mean that's new liquidity into the system, right? It just means that that's a slowdown, or rather an end of liquidity tightening. So it doesn't mean that this immediately leads to rallies. And if you think about it, also markets tend to be forward-looking. So a lot of this has already been priced in by the previously mentioned traders.
That's on short term, but for long-term investors that watching this, a 20 to 30% swing in Bitcoin can feel quite dramatic. But historically, this has happened multiple times, even during bull markets. So from your perspective, should this move be seen as normal cycle volatility, or is there anything in this correction that you consider a genuine red flag?
I don't see anything in this cycle as a genuine red flag. I think we've previously mentioned that there are a couple of very, very well, I would say tailwinds for macroeconomic factors. Some of that we mentioned earlier, the move towards alternative assets and so on. And as you rightly pointed out, also historically we've seen 30%, 40%. In the early days we see even greater pullbacks happening in every bull market. And I think that there's this quote that I like, which is volatility is often the price of performance. So people who are investing, obviously we want the upside, but we also need to recognize that upside tends to come with downside. So an asset that can move very quickly upwards can also swing downwards. Now, I just want to point out also that this current cycle has been quite different, because there are a huge bunch of indicators that people are looking at now in terms of market top signals. So, for example, one signal that's very, very widely quoted in the US is if Coinbase, one of the top investment apps there, if that becomes number one in the App Store, then that's one of the market signals, for example. Now, in this market cycle, we never saw many of this market top indicators hitting. The market never went into euphoria mode, so it's actually very hard to say that the market top has been hit.
And looking ahead now, the next 3 to 6 months come with a lot of moving parts, geopolitical uncertainty, shifting liquidity conditions, ETF flows, and minor economics. So given all these factors, what is your base case scenario for Bitcoin and the broader crypto market in the near term? Are we in for a consolidation phase, a deeper correction, or potential recovery once the market rebuilds momentum?
Yeah, definitely always a tough one to predict the future, Nabila. And I think definitely as a crypto exchange also, we do not take positions on like what's the next expectations and so on. But I do want to quote some of the one of the very, very astute market observers. So Jeff Kendrick is the head of digital assets at Standard Chartered. He came out yesterday saying that he suggested that the market perhaps has bottomed, and his base case is that a year-end rally is still on the cards. I think some of the factors that we've mentioned earlier, a lot of excess leverage has been flushed out, macroeconomic factors, continuing to provide tailwinds and so on. Of course, over the longer term, I am a very optimistic person, and I definitely believe in the future of digital assets. And, I think that is true for many of us here in Malaysia as well.
Finally, Aaron, for everyday Malaysian investors who may be feeling a little unsure after the recent swings, what's the single most important message you want them to take away from this cycle, please?
Definitely, I would view investing into digital assets as a part of your portfolio. So, I think this view always helps people understand that the amount of risk that you take in your portfolio, that needs to be commensurate with your risk appetite and your overall portfolio. That also, if you were to invest into digital assets at a level which is comfortable with your risk appetite and so on, then I think that helps take away a lot of the worries. For example, if somebody was over-invested or investing based on leverage, then somebody might be very, very concerned, very, very worried about the price swings. But somebody who's investing according to their risk appetite, according to an allocation that's suitable for them, I think they would be able to sleep better and be able to ride out the volatility here.
Wait, Aaron, if I may add one more question, what's your outlook for Bitcoin's market in the first quarter of next year, 2026?
Yeah, again, it's quite tough to mention a specific price target, but I think the overall sentiment, one of the alternative views in the market right now, apart from so there's a little bit of a pessimistic view, I would say. Some of the observers have said, okay, this is the end of the 4-year cycle, let's sell, let's move to more stable coins, for example, or move into gold or other assets. But I think the alternate view over the next say 6 months or 9 months, which is in Q1, Q2 next year, is that there's still so many macroeconomic factors that are providing tailwinds to digital assets. For example, we hear about institutionalization of digital assets, tokenization of real world assets, and we see this all over the world, right? It's not just overseas, but also in Malaysia. We're starting to see, for example, Bank Negara, Securities Commission, all come up with their sandboxes for digital assets, potentially even stable coins and so on. So again, the price may move up and down and so on. It's very, very hard to predict, but I think the overall landscape for digital assets is so much better, so much more promised than it was just maybe even 2 years ago.
All right, that was Aaron Tang with the latest on the current state of crypto. Aaron, always great insights and context. Thank you for helping us understand what's driving the crypto markets at this moment. And to our viewers, volatility in crypto is not new, but understanding the forces behind is key to navigating the space responsibly. So thank you so much again, Aaron. And that's all for today's AWANI. I'm Nabila Khalira. Thank you so much for watching.